if you guys don't mind. It's down almost 9%. So it's at the lows of the session.
Yeah.
And as we said, it just hasn't traded all that well of late. You did have the chip announcement at the White House a short time ago, where the president made the comment about the tariffs. Of course, he was welcoming an investment by Taiwan Semi. Christina Partsinevelos is following sort of everything in chips, whether it's Nvidia, the continued slide, and the other names, and then TSMC.
Yeah, so to your point, Nvidia did reverse Friday's, 4% gains and then some. But the big concern right now is looming export controls you mentioned. And I bring this up because Singaporean authorities arrested 3 individuals for fraudulent misrepresentation of the destination of U.S.-made Dell and Supermicro servers. So this past week, and the reason why it's coming up now, is that Singapore's Minister for Home Affairs and Law questioned, quote, whether Malaysia was a final destination. And so that's suggesting possible re-exports to China. Nvidia, of course, is not declined to comment to me. Singapore, though, unexpectedly became Nvidia's second largest revenue source back in 2024. Nvidia clarified that selling to Singapore accounts for 18% of total revenue in fiscal 2025, so that's about $24 billion, while shipping to Singapore represents less than 2%, so about 500 million or so. So there's a big discrepancy between both. And in Nvidia's most recent annual report with the SEC, they said, quote, customers use Singapore to centralize invoicing while our products are almost always shipped elsewhere. So they're trying to tell you that Singapore is not used as a backdoor for China. However, analysts at Mizuho warned today a potential ban on Nvidia chips, specifically the H20s, to China could remove roughly $4 to $5 billion in revenue for fiscal 2026. So there is that overhang for the stock, because in a world where computational power equals geopolitical advantage, and I'm calling it the silicon smugglers game, continues with implications far beyond corporate earnings. And to your point about TSMC, just one last word about their investment. The tariffs will certainly add to TSMC's construction costs, especially after TSMC had already previously, this is going back over a year, acknowledged that U.S. manufacturing in Arizona will cost more to operate than Taiwan. We know that. And back in December, Macquarie Bank estimated at least 30% more. And that's not including these looming tariffs coming. So it's certainly going to be more, and TSMC is very unlikely to absorb those costs. That means the customers have to do so.
All right, that's a good understanding of all of these issues which are at play. Christina, thank you. That's Christina Partsinevelos. Let's now bring in Capital Area Planning Group's Malcolm Etheridge and Requisite Capital's Bryn Talkington. Both are CNBC contributors. Dan Greenhouse, of course, of Solus is still with us. Bryn, I'll go to you first. I mean, are you surprised that Nvidia has continued to trade so poorly?
On the surface, yes, right? So if you look at it fundamentally, they just reported Q3 2025, right? So they have a different year. So if you just look at the estimates for 2027, the stock's trading around 22 times 2027 numbers. And that's where you have to say the market is saying we don't believe that's going to happen. And you have to respect the market. And I think to Christina's point, if we get 4 to 5 billion of tariffs on our export restrictions on these chips, well, there you go. That they're not going to make that 2027 number. And so right now the stock is still trading in this channel between 110 to 115 to 145-ish. So that channel has not been violated. We want to see that hold. But I think that you do need to respect the market of saying, well, you can say what you want about their numbers in the future. We don't believe those are going to happen. And at the same time, you're just seeing so much carnage in like an AMD, which I think is down 55% over the last year. And so this market has not suffered fools, but I don't think this is the time for you just to ignore what the market's saying. I continue to sell calls on the name. I really like the name long term, but I respect how it's trading right now. I do want to see it bounce off this, like right around this level. You want to see it bounce and not violate that.
President Donald Trump and TSMC said Monday that the Taiwanese chipmaker will increase its U.S. production capacity by at least $100 billion in the near future, increasing its total U.S. investment to $165 billion. At a White House conference, TSMC CEO C.C. Wei stated that the new investment will be utilized to construct a research and development center in Arizona, 2 advanced packaging lines, and 3 new chip manufacturing facilities. At the moment, Intel is the only top-tier computer chip maker in the U.S. that has research and development facilities. Above all, Wei stated, we are actually going to produce a lot of AI chips. Trump stated that the TSMC investment is anticipated to create between 20,000 and 25,000 jobs and that the most potent AI chips in the world will be produced in America. Before the investment was formally announced, it was covered by a number of media publications. Since 2020, TSMC, which produces the most cutting-edge AI chips for major tech companies like Apple and Nvidia, has pledged to invest more than $65 billion to construct 3 U.S. manufacturing facilities, or fabs, in Arizona. The first U.S. factory owned by the Taiwanese corporation is completely functioning. The second is scheduled to open in 2028, and development on the third has not yet started. As tensions between the U.S. and China increase as the government seeks to regain technological leadership in the field, analysts and policymakers view the company's U.S. expansion as essential to bolstering the U.S. domestic manufacturing presence. A representative for Nvidia told Yahoo Finance that TSMC's new factories will serve as the cornerstone of a new technology supply chain based in the U.S. Nvidia will make full use of TSMC's extensive global manufacturing network to improve the robustness and agility of our supply. During the briefing on Monday, Commerce Secretary Howard Lutnick stated that President Trump has made it a top priority to bring the production of semiconductor chips domestically. He implied that TSMC made the expenditure in order to evade paying tariffs. They are coming here in large numbers because they want to be in the world's largest market, and they want to avoid the tariffs, and they would have to suffer if they weren't here, Lutnick said. Daniel Newman, CEO of Futurum Group, stated that a larger, more immediate commitment from TSMC should be seen as a measure of goodwill given the impending tariffs and the U.S.'s strong drive to move more production to the U.S. In 2020, during the first term of President Trump, TSMC announced intentions to construct its first semiconductor factory in the United States in Arizona. After receiving $6.6 billion in federal grants as part of the U.S. CHIPS and Science Act, a Biden administration milestone, the business pledged to construct a second factory in 2022 and a third site in the state in 2024. This is huge news for Arizona that officially cements our state as a global hub for building the most advanced microchips in the world, said U.S. Senator Mark Kelly of Arizona on Monday in reference to TSMC's latest investment. It will put tens of thousands of Arizonans in good-paying jobs that do not require a 4-year degree. Bloomberg reports that the Trump administration cut staff from the U.S. CHIPS Act office, coinciding with TSMC's announcement on Monday. Trump has criticized the CHIPS and Science Act, which was passed under Biden, as part of a bipartisan effort to boost American semiconductor production. The first version of the CHIPS Act was approved during Trump's first term. Shares of TSMC traded in the U.S. dropped more than 4% on Monday. So what implications does this have for Nvidia stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Let's call it not 26, but on from there, Carl, that there is going to be some sort of diminution in demand over time, or perhaps even during the course of this year, CapEx budgets have nowhere to go at this point, given the huge commitments, but down, and what that could mean. But you see NVIDIA and the continued weakness.
Yeah, we're lucky that we're going to get quite a few catalysts regarding NVIDIA in the coming weeks. They present, I think, a couple of times this week at a Cowen healthcare conference and then the Morgan Stanley TMT conference, in addition to Jensen's keynote in the coming weeks. But overall, the weakness in anything semi-related is notable today. Broadcom, AMAT, TLAC, and certainly NVIDIA, the biggest laggard on the NDX.
Yeah, other than Intel, which we've pointed out is up for a different reason. Yeah, and which leads us quickly here to NVIDIA, which is down almost 5% again. What do you attribute its recent weakness to, Ben?
Well, there was a lot of noise over the weekend about CoWoS, which is their packaging technology for the new Blackwell, being cut by NVIDIA. I actually think it's noise. I actually think that they're continuing to make progress there that may actually even help margins by the second half. But the noise over the weekend was a fever pitch, and that could be impacting the stock. There's also just a broader sell-off in semis and a negative halo over it due to the administration, worries over bans of chips, worries over more tariffs, worries over China retaliating, worries over the AI diffusion rule that Biden put into place being kept. And that rule bothers me probably the most of all of them. And so until all those are lifted, semi is going to be tough. The AI semi is going to be tough. But hopefully President Trump, sees that we need the stock market to work, and we need to be a leader in AI semis. And get this going again.
Yeah, we'll see.
But obviously, one of the reasons for the weakness in the market at the index level, specifically, is Nvidia, which is down again. Take a look at Nvidia today.
Yeah.
It can't get any footing from earnings. It's been down about 5% today. It's off more than 11% year to date. It is the big issue, along with momentum. You're out of it completely now.
I am out.
When did you sell the rest of it?
I sold the rest of it when they reported earnings. So it's I didn't get it on the upswing in the earnings because it went into the green. I sold it when it started to go into the red. Look, there are a few issues with Nvidia in my view. One of them being that with Apple, for example, you're starting to see them make their own chip, and others all have plans to. It's got competition. Also, it's been reported that that China is buying the Nvidia chip through other countries. So I think that's an issue for them. And then finally, when you take a look at what tariffs could do, and Taiwan Semi has been called out for tariffs, that stock's really gotten hit. It's not reflected here, but they'll pick up the excess capacity.
Well, they're about to announce, we think, according to the Wall Street Journal, a $100 billion investment in the U.S., something you may hear more about as the afternoon progresses.
Right. Most of which, frankly, has been announced already. But the point on NVIDIA is that a lot of people didn't even know why they owned it. They owned it for the momentum. And they owned it because they didn't want to sell it because of taxes. And I think part of the hit to technology overall is that those that came into the year saying, okay, I'm going to wait to sell until the next year, 25, and hopefully pay lower taxes or just delay my taxes for a period. They said, you know what, I can't hold on anymore. So it's a combination of factors that hit that in tech. But it's really notable that the only 2 of the 12 sectors that are down year to date in the S&P are information technology, which is tech, and consumer discretionary.
Which is obviously heavy weighting towards Tesla and Amazon.
Exactly. And I actually am still negative on the market, not bearish, but still negative, and looking to raise cash. That's one of the other reasons I sold NVIDIA.
All right, shareholder snipe. What about Weiss saying, you know what, you got all these cross currents now in the name, hasn't traded well since earnings. Right. The only time it's really traded, quote unquote, well, was pretty recently into the print, 5 days or so into the print. That's it.
Yeah,
that's it.
Yeah. And guess what? The print was obviously solid. It was up 70%. Sales were up 70%. Earnings were up 70% year over year. $35 billion in revenue on the data center, which is up 93% year over year. We were expecting $42 billion for the guide. They guided to 43. But to Weiss's point, I think export controls are obviously a concern. There is some third-party selling via China, where folks are buying their GPU chips. There is absolutely continued demand, but I think, it's obviously decelerating. We can't see 100% year-over-year growth on these metrics quarter after quarter and year after year. So I think that's what a little bit of the digestion is.
Because of the power of its AI chips, NVIDIA has so far been one of the largest beneficiaries of the artificial intelligence AI boom. The corporation has seen a surge in double and triple-digit earnings as a result of the influx of customers seeking them and other goods and services. Consequently, NVIDIA's stock has surged, increasing 1,700% in the last 5 years. Until he sold his stake in NVIDIA in the third quarter of last year, billionaire Stanley Druckenmiller profited greatly from the company's performance. The leading investor eventually apologized, even stating in a Bloomberg interview that he would think about repurchasing the stock if the price was appropriate. Thus, Druckenmiller's continued belief in the stock's long-term growth story is evident. Additionally, he made 2 decisions in the fourth quarter of last year that would enable him to place another wager on NVIDIA. Druckenmiller had a lengthy history of success as the head of Duquesne Capital Management, posting an average annual return of 30% without any years of losses. This was during a 30-year span until Druckenmiller terminated the fund. The billionaire currently manages $3.7 billion through the Duquesne family office, and while he makes investments in a variety of sectors, tech companies have recently had the largest weight. By the end of 2023, Druckenmiller's third largest holding was Nvidia Stock, which he had first purchased in the second quarter of 2016. Therefore, it is clear that Druckenmiller still believes in the stock's long-term growth story. In the fourth quarter of last year, he also made 2 choices that would allow him to wager on NVIDIA once more. As the head of Duquesne Capital Management, Druckenmiller had a long history of success, posting an average annual return of 30% with no years of losses. This occurred 30 years prior to Druckenmiller closing the fund. The billionaire presently oversees $3.7 billion through the Duquesne family office, and although he invests in many different industries, tech firms have recently received the most attention. Initially acquired in the second quarter of 2016, Druckenmiller's third largest position by the end of 2023 was Nvidia shares. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Export restrictions on quite a few countries, but apparently not Singapore.
Yeah, and I was just there on Friday, right? So I could tell you the sense is that these export controls, it's not going to be really constrained to ultimately Singapore. And I think the fear here, and I think you're seeing on the Nvidia sell-off, is that this is going to be a huge ripple effect. It's going to be harder and harder to get those chips. That's something, even though there's the China piece, it could have a much broader impact across the region. I think bark's worse than the bite. I mean, as someone, in Asia for 2 weeks, I think it's when I get the fears, but I don't think this is something that's really going to be as much of a restrictive factor, despite everything we saw today.
Do you think it's deep-seek concerns that are spurring this next wave, potentially, of regulation? And I guess perhaps just as importantly, has the train already left the station when you look at homegrown chip development in a place like China?
Look, I think DeepSeek, that was a shot across the bow, because I think everyone recognized, okay, they didn't do this in the basement with no chips. And it comes down to, if they use next-gen NVIDIA chips, what does that mean? And I think, look, the broader fear, especially that you see in the Trump administration, is, okay, we got restricted more and more. So I think what you're starting to see from an investor perspective is, okay, what does this mean for NVIDIA? Second derivatives. Is this going to crimp the supply chain? Now, we disagree. I think when it comes to tariffs, we've seen many times, this is one, it's going to have an impact, but I do not believe it's going to have such a pronounced impact. I think it's being factored in here in terms of supply chain. Still 15-1 demand to supply, even when it comes to Blackwell.
Well, okay, bark is worse than bite. But still, a bark can be pretty bad if it hurts sentiment, right? If it sort of puts a wet blanket on the party, has an impact on valuation. At what point does it start to do that? And do you have to, if you're an AI investor or even NVIDIA investor, have to get less bullish?
Yeah, look, I mean, no doubt you're going through a lot of turbulence here. From a sentiment perspective, you're seeing the stock, then it becomes self-fulfilling prophecy. But what I'll tell you is it comes down to just demand. Do we see any changes in spending? That demand's going to continue to be there. And I think it's when there's only one chip in the world that ultimately could fuel this. I get we're going to go through this, but in my opinion, these are opportunities, not the time to run for the hills. I think when you look at it in terms of tech winners, if you look over the years, it's period like this and these white knuckle periods that you own the winners, you own the...
Although Druckenmiller hasn't yet revealed any new NVIDIA acquisitions, his actions during the fourth quarter of last year indicate that he is funding two businesses that have the potential to grow alongside NVIDIA. Amazon and Alphabet are two of NVIDIA's clients. During the quarter, Druckenmiller created new jobs at both of these businesses. He acquired 76,680 shares of Alphabet, which now account for roughly 0.4% of his portfolio, and 328,400 shares of Amazon, which now make up 1.9% of it. Through their cloud companies, Amazon and Alphabet provide a wide range of NVIDIA products and services, including NVIDIA graphics processing units, GPUs, which are chips that support important AI functions like training and inferencing. And since these businesses are implementing NVIDIA's most recent Blackwell architecture throughout their clouds, this is a very high-growth moment. In its most recent earnings call, NVIDIA stated that around half of its data center income comes from the big cloud service providers. These businesses are swarming to NVIDIA in order to better serve their own clientele, who are searching for the best cloud-based AI systems. Because of this, NVIDIA's achievements might also be those of Amazon and Alphabet. Both of these cloud providers have reported significant growth as a result of their AI initiatives. Because of its robust AI products and services, Amazon Web Services, the company's cloud division, had an annual revenue run rate of $115 billion last year. Additionally, generative AI solutions and AI infrastructure drove a 30% increase in Alphabet's Google Cloud revenue in the most recent quarter. All of this implies that Druckenmiller may profit from the success of the chip designer while not currently owning any shares of Nvidia due to his investment in Nvidia clients. Do you want to invest in these top cloud stocks like the billionaire? Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.